Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, displaying another rocky month, the Australian dollar closed in the red after many challenges upon the topside level, seen as a key point at 67.35, and we can see here at least many occasions did fail, that the target now looks back towards a region of 65.1995. However, April could start with a boost for the Australian dollar if the Reserve Bank of Australia indicates a pause at this month's rate decision. Although this Tuesday's RBA meeting expects a 25 base point rate hike, that is towards from 360 to 385, the market participants expect a potential rate cut to be delivered by the end of the year. So with many talks of a hike this Tuesday, there is much talk that we may see a rate cut by the end of the year. Still, we've got much to consider on how the inflation travels throughout the next few months. So as I mentioned, the Australian dollar having rejected the topside, the bears are back. Looking at the euro, the market also found a bearish response after challenging the region of 109.35.45, and an area that was seen particularly as a bear camp. The market has rejected, and with the dollar index, which measures the greenback strength against a basket of 6 major currencies, rebounded from 101.80 to 102.25, and now currently trading around 102.50 this morning. In economic data, the US consumer spending rose moderately in February, and while inflation cooled, it remains elevated enough to possibly allow the US Federal Reserve to raise rates possibly one more time this year. The gains on Friday were helped by an extended rally in technology shares following the inflation report. Excluding food and energy, the Fed's preferred inflation gauge, the personal consumption expenditures price index, rose by 0.3% in February, slightly below the forecast of 0.4%, but still far higher than the Fed's 2% goal, while January's release was up around 5% from a year earlier. So looking at the technicals, the market has taken a bit of a dent from the rejection and now looks towards the region of 107.35.45 as many prepare for this week's huge economic data release, with the ISM manufacturing PMI and the SIM services PMI, with the main event being the US non-farms payrolls report for Friday, with a forecast seen around 240,000 jobs added, with the previous month's release around 311. If the market is seen as a stronger number, then there'll be much talk that 25 base point will be locked in for the Fed's meeting on 3rd of May. Reassess from the level of 107.35.45 in case we get a bounce. The dollar yen, well, the market's a little bit mixed after this inverted gravestone, or an inverted hammer, has still put a little bit of a mixture of demand and supply. Nevertheless, I feel the bulls are still there, and therefore could expect to see a further gain up towards the region of 133.65 and on towards 134.50.80 as the objective for the coming session and into this week. Any pullback is likely to be shallow. Moving on to sterling, the market was a little bit mixed, having taken the challenge to the top side to previous levels that we can see back in January and also back in December, where the bears were camped out and still are. As we can see, the market took a very heavy tumble and now back on track to look towards that region of 122.10.15 and reassess from there. Technicals are broken down and the bears do look like they are weighing heavily on the market, just like gold after the topside challenge, and previously back around $2,000 mark. We are looking to the downside level of around 1,958 to 1,935 to 36 as a potential target. Technicals are weak, but do be on your guard in case we see a bit of profit taking, because I feel that we are still likely to be locked in in the parameters of a broader outlook of 1,935 to 1,995 to 2,000. Finishing up with oil, we can see there's a $5 gap here this morning after the unexpected surprise of OPEC's output cuts. The OPEC and their allies, including Russia, shook markets by announcing production cuts of around 1.16 million barrels daily on Sunday. The group known as OPEC had been expected to maintain its early decision to cut output by 2 million barrels until December. However, in other news, the Biden administration said the move announced by the producers as unwise. With both the targets to the top side reached, that is at 74 and 76, I'm now going to step out and see how this market unfolds due to this gap. But I will view the market up towards 82, 40, 90 as a key level, as a break would see further gains and ignite a move up to $86. So keep an eye on this level, a key point that is around 82, 40, 90. Well, that's a wrap for the start of this week. Thank you very much for joining me. And as always, look out for the interest rate report. I hope you enjoy the great start to the week.